Well, welcome everyone to the DEX Wars panel. Really excited to be here today. We have some really amazing guests, and I'm excited to get started. If you both don't mind to quickly introduce yourself and just give a short blurb to the audience, that'd be great. Davide, if you want to start.
Yeah, I am Davide Fi from Trader Joe.
Woo!
I'm the general manager for the DEX. Trader Joe is the most innovative concentrated liquidity protocol on Arbitrum, and I'm very happy of talking to you all today.
I'm Ian Boots from the core team at Camelot. I do everything that the devs don't like doing. We're a very small team. We are the largest native DEX, one of the largest native protocols. And we started really with the goal to support the ecosystem, and I think we've done a relatively good job. So glad to be here.
Hey guys, I'm Vlad, co-founder and CEO of Lighter. We're the first order book DEX on Arbitrum, and it's been great to be part of this ecosystem and build with y'all.
Awesome. And I'm Peter. I'm on the partnership team at Offchain Labs, and I'll be the moderator for this panel. And so let's address the elephant in the room, gentlemen. Do you believe one DEX will have majority market share in the future, or will it be more fragmented? I'm curious if you think that's the case, and if not, what do you think the future looks like?
I think I would first start by saying that, like, when you look at DeFi now and you look at the growth potential, like, there's never going to be a scenario where there's just one or two DEXs, right? Like, the volumes that we see today are going to look very insignificant in the next 2, 3, 4, 5 years. So, like, there's no free market in the world with that much growth that you won't have competition. And I think if you look at, like, stock exchanges, right? Like, there's certain stock exchanges for certain geographies, and I think DEXs follow a similar role. Like, Trader Joe have their own market fit. Camelot, we have our own, like, being very ARB native, focusing on different asset classes, different geographies, the same as chains, right? So I think a native DEX is the best example. And I think actually there should be more competition, because if you look at most chains, Uniswap is the lion's share. And if you look at DeFi, like, DeFi can only exist with spot liquidity. And there should actually be more innovation, more people trying. So I welcome it.
No, I think that's a great answer.
Yeah, I mean, I think that there are different use cases for different types of exchanges. Like, I think for us, the focus is really to build the most efficient way to trade the most liquid tokens. And so, I think, from that perspective, I think there's the order book model. We see there's a lot of scaling ahead there, but I think there are many other models that work. And I think the nice thing about DeFi is that it can kind of all coexist nicely through smart contracts. So I do think that it's actually like a healthy ecosystem when there's competition that way.
Yeah, we believe that in an open market, of course, there is going to be some selection, because DEXs need to give their unique use case in order for them to thrive. But a blockchain with a vibrant ecosystem needs a very diverse environment of different protocols that all in their little or big, they are trying to innovate with their unique use cases and features. So a diverse space is healthy and everything we need in order for anyone that wants to come and build to find their own chance of making it.
I mean, because I'll just quickly add that, like, I think a good example is, like, when we came to ARB, or Camelot came to ARB, like, we never, the goal was never to compete with, like, Uni or Trader Joe on, like, blue chip volume, right? Like, as a business model, that's pretty bad, because they're better at it, they make more money doing it. So I think for us, like, it was really just finding our niche and, like, staying very high conviction to that, right? Like, focusing on the altcoins, the longer tail assets, which are the native tokens. So I think, yeah, like, there should be much more competition, but nobody should try and just do everything. I think that's kind of one of the worst business approaches. But
Yeah, I mean, I think you guys bring up a lot of good points about, having many different alternatives there. And I guess as decentralized exchanges continue to evolve, how do you see their impact on traditional centralized exchanges and the broader financial industry?
Well, we are all here to push retail towards on-chain activities. Besides, every cycle people seem to forget why we all had Web3 and cryptocurrencies exist with on-chain activities. We are all here for the blockchain, and pushing users towards the blockchain should be the end goal of any DeFi protocol. And we want to make sure that all users will find a simple and seamless UI, UX whenever they get on chain, because it's one of the biggest issues that users find, that it's just easier to use centralized exchanges. That's why DeFi has to do some extra effort in making sure that user experience is top-notch as the best software that they use. People also want the best user experience on chain, and we all have to make accessibility to the users the number one effort in order to embark them on chain.
Yeah, for sure. And I think it's, very similar for us. And I think it's the same as the first question, things that Trader Joe do, push Camelot to also innovate. And I think you need good competition to force yourself to constantly, reiterate and improve yourself. But yeah, and I think Camelot specifically, I can only really speak for us. But, there's still many tokens that you can't literally trade anywhere else, right? And that's, again, our market fit of, if you're a massive Arbitrum user and you do want to follow the native protocols, for the most part, you can't really buy or trade or speculate on those on a central exchange, right? So it's kind of different angles really, where, because that's our focus, we're also looking at how do you bring that CEX experience to tokens that don't have liquidity and elsewhere, right? So I think everybody comes from different angles, but predominantly we are always driven, Camelot's always driven by supporting those native builders. And I think, that's just something that a CEX, that's the role they don't play, right? They aren't on chain. So
the long tail of assets.
Yeah, I mean, I think at this point the tech is getting very close to the point where a decentralized exchange can kind of have feature parity in terms of low costs and high throughput to centralized exchanges. So I think that's going to be a very exciting moment for DeFi when that finally happens. And then also, I guess, for me, coming from, spending a bunch of time in TradFi, I mean, I think seeing, there are a couple of interesting things happening there too. For example, a bunch of central banks are now looking at building stable coins. I think when, those are longer term initiatives, but I think when a lot of that happens, that'll also, that ties in really nicely with decentralized exchanges. So hopefully we'll see, a lot, I think, higher order of magnitudes of volume soon.
100%.
And can I just shout out, I think that a team here that I think is a great example is I think people still have quite an outdated view of DEXs, in a sense of why can't a DEX be the stock exchange of the future? I think we all just view it as on-chain DeFi assets, right? Which is true, because that is 99.9% of the current volume. But you are going to enter a world where there is more tokenized things on chains, whether that's treasuries, whether that's startup shares, like Arbitrum, the guys here, they're actually going to tokenize the first startup shares and launch it on Camelot. I think examples like this, it's never going to go from 0 to 100 overnight, but you're going to get to a point where CEX is just, maybe they're the best for on-ramping, but in terms of the assets and what they can offer, they start to fall behind, and on-chain starts to lead that.
Yeah, and the innovation is quite there on the DEX side of things. I guess when people think about DEXs, they all think they're the same, but I know each of you is working really hard to advance the innovation in the space. So it'd be great to get your thoughts. I'll start with you, David, on what your company thinks those advancements may look like.
So advancements as a DEX require to have a specific direction in what you want to deliver to the users. We deployed at Trader Joe 2 years ago. It started as a humble fork, but then understood that in order to diversify ourselves and make sure that users would stick with the technology, but also our technology as tech stack will follow the trends. We spent over 1 year in building Liquidity Book, which is the core product that we have on Arbitrum. And thanks to having built our own AMM model, we are now in a space where we have the chance, unlike forks or license solutions, to move very quickly, listening to the market and to the users for feedback on features they dream to see on a DEX. And the fact that our protocol is 100% research and custom built by our great engineers allows us to be able to react very quickly to the market and to deliver the features that are not there available, but are definitely the ones that users would like to see the most and the quickest. So building our own product and build through builders is the way for us to be unique.
Can you tell us what some of those future advancements may be?
Future or current?
If you can.
Well, so features specifically, or
whatever you're comfortable sharing.
Well, we continue to iterate on products that have been unique in the space beyond doing concentrated liquidity with liquidity bean architecture, which was unique. Let's call it a vertical order book of liquidity. We also had the possibility to implement managed vault solutions, which are automatically rebalanced for the end users that can just deploy and then monitor the position being adjusted, on-chain limit orders, volatility, Oracle, all things that are already live before other DEXs might have made their own announcement. We already have our own roadmap of things that now are needed, and very excited to quickly iterate.
That's great.
Yeah, I mean, I think I'll start off by saying, yeah, I have a lot of respect for Trader Joe and how they did the liquidity book. Like, as a DEX, to really try and change the underlying AMM take some balls. So always respect you for that. I think from Camelot, like, I think it's sometimes underappreciated, like, how much is custom code, which shout out to our devs here. Like, literally most of it is custom code, and that's why they don't sleep. But I think for us, like, the goal really is like a much more holistic approach, I think. Like, for us, the goal was always to support the native builders. And the best way to do that from a tech perspective, is to have that flexibility, right? So you can go to protocols and you can say, like, look, what can we actually build that you want to use, right? And I think that's kind of all of these things combined is what has led to Camelot's pretty rapid growth and, dare I say it, success, is that it is part of the tech, but the tech without the BD, it's what do you have, right? So, and it goes both ways, the tech without the BD, without the tech, et cetera, et cetera. So I think for us, it was really like, we know our strengths, we know our capacity. We're not going to reinvent the wheel, but we're going to build a product that people want to use and people want to use today. And I think that's kind of what we have done well. And same with concentrated liquidity. Like, we deliberately didn't want that to begin with, because for the most part, if you're trying to support native protocols, V3 actually isn't a good option. Like, most of these protocols that launch a new token is very volatile. There's not a lot of liquidity. Like, users, like their main community base don't know how to use V3. So for the most part, like, we wanted to build the foundation on what works, which is XYK pools and stable swap. And then when we were ready to really try and move to the next point, right? But even then, when we look at V3 now, it's a case of like, how do we build it as a product for this native ecosystem, right? It's not like, for us, efficiency is great, but it's not that number one factor, which makes it a lot harder to quantify and define, as can be seen from some of the discussions around our proposal of like, is Camelot the most efficient? But I think, like, how do you value bringing new partners into the ecosystem, right? Like, how do you value that? It's much harder to do it than just saying this pool is efficient at this. So I think, yeah, for us, it's that holistic approach, which makes it much harder to compare versus, say, Uniswap does 100 mil volume on this pool, Camelot does a lot less, but, there's so many more peripheral externalities that you have to take into account that, like, there's no one size fits all, I think.
Totally accurate.
And sure.
Yeah, I mean, I think in terms of innovation, the last couple of months, what we've been able to prove out is that, a fully decentralized order book is possible in the Ethereum ecosystem, specifically on Arbitrum. So I think that's been a great milestone. And then beyond that, I think, one big thing that's going to change the landscape is pro-dank sharding, right? Once that comes out and costs are going to be a couple of orders of magnitude less, that opens up a whole lot of other features that aren't possible right now, like new order types or being able to do market making for options and other leverage products. Like I think there's like a whole wave of kind of financial engineering through smart contracts that we think will open up kind of at the end of this year. So that's the part that I'm most excited about.
I'm super excited for EIP 48442 and the work that Terrence and the Prismatic Labs team is doing. One thing that I haven't touched base on, gentlemen, is user experience. And so today most DEXs are desktop based, but a lot of us are on mobile. So as an open question, how is your team thinking about mobile and the evolving landscape there? Whoever.
Yeah, I have a fun story about this because after the first week that Trader Joe was launched 2 years ago, we realized that a lot of our users were coming to us telling us on Discord that a button or a feature wasn't working as they expected. And we immediately started researching what's the usage of mobile devices. And it was clear that more than 50% of users already 2 years ago were doing DeFi only on mobile. And researching deeper with the community, actually many of DeFi users around the world don't even have access to a desktop computer. They will have to go to an internet cafe or something, and they were praying us to do something mobile friendly first so that they could use our DEX as they wanted. And that's why since then we have always prioritized with a UI UX to be a mobile first company and making sure our framework and app always looks top notch on any type of mobile device, because making DeFi accessible means being mobile first.
Yeah, totally. And we're seeing a lot of growth with a lot of, different wallets like Coinbase Wallet and others that are building. And so it's great to hear that you guys are being proactive about that. Vlad, I have a specific question for you. AMMs are certainly popular in crypto, just by evidence of looking at the panel here. Can you share why your team went with an order book-based model?
Definitely. And also, just to weigh in a little bit on the last point, I guess, from our perspective, we want to build kind of the most efficient infrastructure to trade liquid tokens. So I think, to the extent that the lighter protocol can be used by other front ends, like, for example, we started a joint project with the Robinhood team. And so, that like they've built an amazing front end for stock trading. So I think, which is obviously mobile first. So I think, kind of our view on that is like tapping into kind of existing, kind of mobile first experiences that, our partners may have already built out and kind of integrating there. But I guess, to your point about the order books, I think, kind of, if you take out, the constraints of, high costs and a low latency, like, the order book model is the most efficient kind of market design. And so, now that the tech, the Arbitrum sequencer, for example, is super fast, right? And we've been able to really like optimize costs, like, that way you can provide, basically an experience without slippage and kind of the most flexibility for traders, where traders and market makers are kind of on a level playing field. And, I will say, coming from TradFi, right, like there's a reason why every, major exchange in the world uses an order book model there. And I think what's been really nice is that now we've seen, since we've been on Arbitrum, like we're plugged into 1inch. And so, at this point we're getting, 30-40% of the volume from 1inch. And so I think that kind of now, in terms of not just theory, but in terms of data, we can see like most days we're getting, more volume from 1inch than the AMM alternatives for the most liquid pairs. So I think that's kind of our view, and it's nice to see that the experience on Arbitrum has proven that out.
Yeah, and the AMM model really took hold on Ethereum mainnet because the gas fees were so high, and so now it's nice that Arbitrum affords that scalability and the lower fees. Now, Iron Boots, I have one question for you. I think it's evident that collaboration is key to success in the Arbitrum ecosystem. Could you shed some light on how your team actively engages with others and contributes to their overall success?
Sure. And I think, yeah, this is one of those points which, if you're not massively tuned into the daily life of Arbitrum, it can be hard to not fully appreciate. But yeah, I think like the majority of our effort since we launched in November has been to really build close relationships with builders, right? And I think what we have is our round table, and there's a reason why the majority of almost all Arbitrum protocols are part of it. And I think that's because, again, you can't do this on many other ecosystems, but Arbitrum is a place where you do have so many builders, right? You do have so many protocols. And I think when you have an ecosystem like that, it makes a lot of sense to have the DEX as the natural hub. At the end of the day, like all of these protocols that have tokens, they need liquidity, right? So our kind of whole value add is like, we want to be that long-term hub where you can just have your token liquidity, we can help you structure it, and we can help build around it. So yeah, like I think you can see a lot of the outcome of that approach with the round table. And just, if you look, most new Arbitrum tokens launch on Camelot. And I think we've really been able to have a lot of support, and very fortunate for that in such a short time. But that really creates this environment, right, where it does become almost the front end of Arbitrum, because quite frankly, most people are interested in a chain or a protocol because of the token. So having that as this focal point where people can come and they can see all of the same ones, they have the same yield opportunities in this place. I think that's really kind of what we focused on, and has, inshallah, worked out well, that you have GMX, Vila, Pendle, all of these guys in the same place as you have a brand new protocol like DMT. So I think, for us, we've just been super focused on how do we foster that. And yeah, like I say, it comes back to the earlier point, right? It's very holistic. It's the tech, it's the BD approach. Like most of the biggest Arbitrum protocols have a stake in Camelot, in Grail. We were very eager to decentralize the protocol in that way. And again, like the average user doesn't know that or really appreciate it, but that has very long-term material effects. And I like to think that we'll continue to play that role. Obviously, our grant proposal plays an important role in trying to be a catalyst for that. So regardless of the outcome, I think we're excited to start the conversation. It's a very healthy conversation to have, and I would love for us to still be a big catalyst for Arbitrum in the future.
And we do too. and yeah, we do appreciate all the help and support you've had.
I mean, yeah, like I think it can be seen from us, right? Like you guys always have people that want to reach out and want help to support, and I think seeing that's our KPI, right? Like having people come to us and just want to be part of like the environment, the ecosystem. For us, that's how we define kind of the success of what we've built. So
awesome. David, your team came from the Avalanche ecosystem and has made a successful migration over to Arbitrum. Can you shed some light on how your team was able to do this?
Many people think that deploying on another blockchain is just a new RPC and then liquidity will come. But they don't understand that dedication and commitment is something that is truly necessary and also perceived. When we wanted to deploy on Arbitrum, we made this decision after many months of analysis, thinking of the ecosystem, and understood that Arbitrum was going to be a good home for the expertise that we built in-house. A DEX thrives in a vibrant ecosystem where interesting tokens are offered and interesting protocols built on top of your protocol in a modular way. And we have always believed in a free and open market where all liquidity providers are free to try different ways of providing their liquidity to their user, experiment with something new, and to get access to unique communities. The Joy users have gone, thanks to our Arbitrum Adventure campaign and all the partnership, we've been through a true education process where we had introduced all the people that wanted to work with us to the Joy community and vice versa. And this type of collaboration where everyone is your friend as long as they want to do something with you is truly part of our spirit. We do believe truly that when we started, we had conversations with all protocols on the blockchain, just introducing us, wanting to know if they wanted to do anything with us. We have a community that they could be exposed towards, a protocol ready to help them do anything they wish to do if they needed support. And we are always there with anyone that wants our help. And for us, it's truly a key aspect, the fact that openness and dedication to these partners is a success. You need to talk to everyone, and building true relationship with projects on a blockchain is fundamental.
And you guys have done an incredible job there, and we appreciate all the work that has come from the Trader Joe team. As we wrap up this panel, could each participant share one major lesson or key takeaway that they've learned from their experience in the DEX ecosystem? Vlad, I'll start with you.
Yeah, I think, I guess one surprising thing has been that, I would have expected that the kind of shift of volume from CeFi to DeFi would have been faster with kind of all the myriad of problems with centralized exchanges. I think there's a point made earlier. It's like, like the reason we all got into the space to begin with is because of kind of belief in decentralized protocols. And so like now that there's so many great venues to trade that are fully decentralized, like I would have expected that shift to be faster. I guess kind of on the positive side, I think what's been great is that kind of the DeFi ecosystem itself has been, kind of quite welcoming and kind of easy to navigate, and we've been able to kind of do integrations and partnerships. So I think that's kind of the the positive side of that. But I think I think we all probably want to see kind of a faster shift from CeFi to DeFi, which hasn't quite happened yet. But maybe in the next year,
maybe you can make it happen. Our boots.
Yeah, I think one of the main things we have learned a lot about is just like the difference in liquidity itself. Like, I think that's, again, I touched on it earlier, but a lot of people have this conception of looking at ETHUSDC on Uni and then just looking at the same pool on Camelot and kind of expecting the same metrics to apply. And I think what we've discovered just from launching so many new protocols, right? Like, that's such a pivotal point in a project's journey. And a lot of teams haven't gone through that process. And we've now, for our sins, probably launched 10, 12, helped launch 12 different tokens on Camelot. And I think that's given us so much insight into like how liquidity should be structured to begin with. And I think that's why like we do have a lot come to us, because like I say, yeah, there's just not that many teams that have gone through the process of launching a token, structuring your poll. And again, like I think even just our emphasis on having protocol and liquidity has been a huge shift, right? Because the first scenario, which we kind of moved away from, was having very inflationary liquidity incentives. Whereas now, with almost all of the new protocols that launch on Camelot, the main thing that we emphasize is to have poll, because you turn then your liquidity from a cost, a burden that you have to incentivize for perpetuity, you turn it into an actual source of revenue, right? Like if you grow, your poll grows with you. And I think that's why so many partners have chosen Camelot, because that's part of the process that we come into. I think one of the other big lessons is you really have to love what you do, because no matter how hard you try or how successful you are, there will always be someone on Twitter shitting on you every day, regardless of how hard you care. So I think, yeah, you have to have relatively tough skin, and you have to be passionate, because it's hard and you're all doing it for the first time. So that's like, I'd never say a bad thing about Trader Joe or another DEX, because we're all making it up as we go along to a certain extent. Should we symbolically shake hands?
Agree. The key take that I like to share is to not chase the trend. So it's so easy to get confused in what to do next, in wanting to be everywhere, trying to be there as fast as possible. But what we have learned over the years is that methodical decision making and proper conviction on the decision you are making is fundamental to be successful. And chasing trends blurs your vision in a long-term roadmap, because so many new protocols, or for example DEXs, we could say, have launched at the top of the hype, and after 2 months they were all gone already, trying to chase a trend without a long-term perspective on how to stay sustainable while having a vision of where you want to be when you are actually half done in your roadmap. And that's also why we believe of what we have done on Arbitrum, because we deployed at the right time, and that was definitely a key factor for us.
And we definitely agree with, taking the long-term approach is the right way, and not making shortcuts. Well, this has been fun, gentlemen. Appreciate your time, and I hope everyone enjoys the rest of the event.
Cheers. Thank you.
Thank you.